The next thing here we have is forward dividend and yield. So the forward dividend and yield is saying, will this company pay out a future dividend? And let's explain a dividend. So what a dividend is the, companies that have been established that are making profits tend to say, hey, we're going to pass that money on to our shareholders. So every quarter they can say, okay, if you have a share of Nike, we'll give you $1 for every share that you have. Now, these are called income producing stocks that pay dividends. And you definitely want to have stocks that pay dividends, because when you're looking at stocks without dividends, you're really playing the game of this stock is going to increase in price. However, when you're looking at stocks that have dividends, you're saying, by me owning this stock, by the mere fact that I own this stock, this company traditionally has been paying dividends, been giving excess money that they have, passing it down to the shareholders. Now, companies do this because it makes their stock more attractive. You want a stock that's going to, pay you, some of the net profits that the company's getting overall, because you are part owner because you own the shares. So the forward dividend is saying, when will they pay a dividend? If they are going to pay a dividend, what is the yield? What is the percentage amount? So let's say, okay, it's just taking based on how much we say we're going to give. If we're going to give $1 per share, then it could be, 1%. The dividend yield would be 1% if the stock is at what? $100. So we say $1 a share, the stock is at $100. So the percent yield that you have is 1%. Now you're going to get that 1% over a year. So they would annualize it to say 4% is what you would get your dividend yield for that stock. But all of those dividends, you can have them reinvested into the account to buy more shares, or you can just have the money be sent to you. And a lot of seniors and a lot of financially stable people live off of those dividends. So they have their principal amount set in there, and then that's fluctuating up and down. However, Nike is saying, because we're doing well, we're going to pay you out a portion of our profits to our shareholders, or Pfizer, or other dividend and income producing securities. The next is the ex-dividend date. So X, think of without the dividend. So when they announce, they say, hey, we're going to pay a dividend to our shareholders of record on this date. So if this date is December the 15th, and that's the holders of record, then the X date would be the 16th, to show that anybody that purchased the stock after this date will not receive the dividend. So the X date is the date that after this date, you will not receive the dividend that we just listed. Now, if you hold it, for the next quarter and they pay another dividend, then right, you'll be in within that X date. But if you trade it, or if you sell it, of course you're not going to have the dividend. But if you have to buy it before the X date to receive the actual dividend. The final thing that we're going to see on Yahoo Finance is the 1-year target estimate. And this is really where the financial experts are saying where they think this stock is going to be in a year. And in this case, Alkaline 88, they're saying they expect, or they think it's going to be $3.50. So stock quotes, that is the first step. This is the price tag. This is what you need to know when you're going to buy a stock.